Before we jump straight into the strategies, I want to start by grounding us in why this matters so much for veterinary practice owners. Every single week, I talk to doctors and practice managers who feel stuck between two extremes. Either you pay more in taxes than necessary because you don't want to get on the IRS's radar, or you're taking advice from well-meaning friends, Facebook groups, or even non-vet accountants who tell you to just write it off without explaining what exactly or what happens if it's done incorrectly. And neither of those paths is really sustainable. You cannot build long-term profitability or predictable cash flow when you swing between overpaying and being fearful of making a move. Um, Give me one sec. Just got to make sure there. Okay, Facebook's been giving me fits about making this work. So, anyways, what I want to walk you through today is the middle ground. The middle ground is the place where smart owners operate. Strategies that reduce taxes, protect you, and follow the rules. Strategies that actually hold up when the IRS asks questions. And that's why this conversation is important. When you understand how to blend clean financial or clean compliance with strategic planning, you not only pay less in taxes, but you also create a financially stronger practice. And that, sorry, I lost my train of thought. Financially stronger practice, and that strength gives you options, gives you better staffing, better equipment, better pay for yourself, and more margin every month. Um, Sorry, gotta get rid of my gum. So today we're going to walk through the 8 perfectly legal, perfectly defensible ways to reduce your tax burden while staying completely off the IRS's radar. These are vetted strategies, not loopholes or shortcuts. They're the real world tools every veterinary practice should be using. Stay with me until the end because I want you to see how simple and doable these are, or how doable these can be once you understand them. Oops, no, I was on the right slide already. So let's lay the foundation and talk about what legit actually means. These strategies work because they're rooted in documentation, consistency, and choosing the right structure for your practice, not in trying to outsmart the IRS or doing some fancy stuff that's just too complicated. You're going to hear me emphasize this more than once. The IRS does not get upset about deductions when they're tied to real business activity, legitimate proof, and a clear explanation. What they care about is sloppy records, personal expenses masquerading as business write-offs, or deductions that don't make sense for your industry. Everything we're going to cover today fits cleanly inside the rules. And when you implement these the right way, your taxes will go down, your risk will stay low, and you'll operate in the space I call smart, not shady. That's where every profitable vet practice should live. Before we get into the strategies, let me introduce myself for anyone who's new here. My name is Cassie Sykes. I'm an enrolled agent based in East Texas, and I specialize in working with veterinary practice owners all over the country. I've spent years inside the industry, not just doing taxes, but helping practices understand their numbers, interpret their financials, and make decisions that support the medicine, the team, and the profitability. I'm married. I have 2 teenagers. I've worked inside and around vet clinics for a long time, and I know the pressures you're under. Staffing issues, rising cost of goods, declining reimbursements, burnout, and the constant tug of war between patient care and practice profitability. So when we talk about taxes today, I'm not coming at this from a vague small business angle. Everything we cover is built for the veterinary world specifically. If you're joining this live, jump in the comments and tell me where you're watching from. Join me live and get your questions answered as we go. So let's start with the strategy that quietly saves many practice owners thousands every year. Being in the right entity at the right time. A lot of vets will stay sole proprietors way too long, and some switch to an S Corp way too early without fully understanding payroll, reasonable compensation, or your state requirements. The IRS doesn't dislike S Corps. They dislike S Corps that don't follow the S Corp rules. So when your entity type aligns with your revenue, your pay structure, and your growth stage, your taxes will drop without raising any red flags. Choosing the wrong entity creates the exact opposite problem: higher taxes, messy books, and payroll mistakes that flag audits. So, if your practice has never had an entity analysis or it's been a few years, this is one of the smartest, cleanest tax saving moves you can make. The second strategy is to reimburse yourself properly. This one is huge and often completely overlooked. The IRS allows you to reimburse yourself for legitimate business expenses you pay personally, but only if it's done through an accountable plan. That means records, receipts, dates, business purpose, and consistent submission. When owners skip this structure and just run it through the business, that's when things start to look questionable. A clean reimbursement system gives you the deduction legally without the appearance of commingling funds. It also protects you during an audit because the documentation shows exactly what you did and why. This is a strategy you can implement immediately with zero risk as long as the system is consistent. The third is to keep your books, get your books, and keep your books clean enough to defend. You cannot take deductions you cannot prove. And nothing raises red flags faster than mismatched numbers, missing receipts, or personal expenses mixed in with your practice transactions. Clean books are your first line of defense and your gateway to legitimate tax savings. When your bookkeeping is current, reconciled, and categorized correctly every month, you can safely take every deduction you're entitled to without fear. When it's messy, you end up skipping deductions you should be taking. Clean books don't just protect you, they lower your taxes because you stop leaving money on the table. The fourth is to take advantage of credits you qualify for. There are a lot of credits out there that that some veterinary practices qualify for that they never take. There's the EV credit, the clean energy credit for your building, credits for certain equipment improvements, and even credits tied to specific types of employment or employees or training. Credits are dollar for dollar tax reductions. They're way stronger than deductions, and they sit perfectly within IRS rules. What gets people into trouble is trying to qualify for credits they don't meet the requirements for. And then when you stick to the ones you legitimately qualify for, you save significantly and stay well within the lines. Your accountant should be checking these annually because credits change constantly. The fifth is to leverage your retirement contributions. This is one of the most straightforward IRS approved ways to reduce your taxes. And it's also one of the most underutilized in veterinary practices. You don't have to jump straight to a 401k match or a complicated profit sharing plan. Even a simple solo 401k or a SEP SEP contribution can create massive tax savings. The IRS loves retirement plans because they support long-term financial security. When these contributions are set up properly, documented, and tied to real payroll or owner draws, they're one of the safest ways to lower taxable income without raising a single question. Strategies 6 through 8, I call the SMART, not shady trio. So these are grouped together because they work well when used side by side. First is the equipment deduction strategy, not just expensing everything, but planning your purchases. So Section 179 is legitimate when used correctly, and accelerating depreciation is allowed when it aligns with your actual usage and revenue plan. The red flags appear only when the purchases don't match the business activity. Second is home office expense. It is perfectly legal when it's structured, measured, documented, and not exaggerated. Their IRS hates it when there's inconsistency in the deduction, not the deduction itself. Third is the medical reimbursement plans for owners. When used correctly, these allow certain medical costs to be reimbursed by the business. When used incorrectly, they get shut down quickly. The difference is structure and documentation. These three together give you a clean, defensible deductions that reduce your taxable income dramatically without ever stepping outside the rules. A quick self-check. Are you leaving money on the table? At this point in the training, I always ask practice owners to pause and honestly assess where they stand. Are your books clean enough to defend? Are you reimbursing yourself properly? Are you in the right entity type? Do you have a plan for equipment deductions instead of using them reactively? Do you know which credits you qualify for? If your answer is, I think so, or I'm not sure, you're likely missing out on legitimate tax savings, on some legitimate tax savings that you're entitled to. And that uncertainty is exactly what leads to overpaying or being hesitant to take deductions that are completely safe. This is the moment where the smartest practice owners stop guessing and get clarity. You want to set a weekly rhythm in how to stay compliant. So your ability to stay compliant and keep taxes low will come down to this rhythm, not a once a year panic. When you touch your numbers weekly, keep your receipts organized, check your books regularly, review your reimbursements, keep your payroll structured correctly, everything becomes easier. You avoid corrections, you avoid last minute scrambling, and you avoid red flags. Owners who follow a consistent rhythm feel confident taking every deduction because they can defend it without hesitation. If your weekly financial rhythm doesn't exist or it's inconsistent, that's where we need to work to tighten things up first. If you want help getting any of this set up, or you just want someone to walk through your numbers and pinpoint where the cash is leaking, you can book a free profit and cash flow analysis. During this call, we'll review your actual data, identify the gaps, and show you what's driving the issues inside your practice. I'll drop a link in the comments where you can book your call. Before you go, I want to share an incredible resource that has been designed to elevate your veterinary practice's financial success. I put together a free ebook just for you. It's called 7 Financial Strategies. Inside, you'll discover practical steps to increase your profitability, improve your cash flow, and make smarter financial decisions for your practice. You can also grab your free copy of the ebook in the comments. So that's it for today. Thank you so much for joining me. If this helped, if this training helped at all, please pass it along to another vet owner who could use a clearer picture of their numbers. And if you're ready to get yours dialed in, go ahead and book that free profit and cash flow analysis. If you want to make sure your tax planning is both compliant and optimized, meaning you're paying only what you legally owe and nothing more, I'm here for that. I hope you have a wonderful Thanksgiving tomorrow, and I hope you are taking a little bit of time off to spend with your family. And we will see you next week. Thank you so much.